Let me now bring on board Krishna Kumar Karwa, Managing Director, CFO of Emkay Global Financial Services. KK, morning. Thank you for joining us. What do you want to start with? Your call on the index or money-making ideas for FY13?
Good morning. I couldn't hear you well, Nikunj. Can you just repeat the question?
Yep. In such a market condition, KK, nobody is able to hear anything about money-making ideas.
Yeah, it's a challenging market environment, and after the deep rally of sharp rally from 46 to 5600 and now at around 5300 odd, it's a challenging question as far as from here where. And in terms of basically you will have results season coming along, and what kind of commentaries management will give in terms of their expectations for the year going forward. I think it's more going to be bottoms up stock picking kind of a market than being a kind of a sectoral view, because on a macro basis every sector you can find negatives to talk about. But having seen earlier also that when corporates announce their results, some of them are able to weather the headwinds better than normal, and those are the stocks which will continue to outperform. I believe that if your domestic fundamentals remain challenging, then money will tend to again flow into the defensives, like you could again possibly see consumers and pharma and even to some extent IT, these sectors again attracting inflows from investors.
So KK, the story of how Indian markets, or what dominated Indian markets for the quarter gone by, was global momentum, global liquidity and global risk on trade. So what to your mind will dominate this quarter?
I think it will continue to be the same as because finally it's the global liquidity which is the dominating factor and which is driving our market. Domestic factors like if there are any policy initiatives and the like, if those things kind of initiate action, then obviously the rally could continue further. But if there are no domestic initiatives, then we will be solely dependent on the FII flows. And so far they have been robust, and if globally also most of the markets have performed well. So if global markets continue to do well and you have decent liquidity flowing, then we may continue to rally up. But if your domestic fundamentals don't improve, then maybe 10% up from here, and then the markets will look very overvalued.
KK, what about the key trigger points that the market is going to be working with this week? Of course, the fourth quarter numbers, which are going to be perhaps the poorest of the lot, and of course the credit policy. What do you think the market is pricing in from both these events? The
markets have been, as far as analyst community is concerned, they have been very, very cautious on their estimates, and we have seen post the December quarter numbers also that wherever corporates outperform the analyst expectations, markets have reacted upwards, and there have not been far too many downgrades post the numbers announcements. So I think that still that cautiousness as far as analyst community is concerned is still there, and so based on the numbers and the guidances, you could possibly see upticks wherever analysts have expected more pressure on numbers than what they actually the corporates have announced. As far as the upcoming credit policy on April 17th is concerned, the general expectations is there that there will be a 25 bips rate cut. But I believe more than the rate cut, what is required is to improve the liquidity in the system. So until unless you have a rate cut along with an improvement in the liquidity, this is not going to work, and 25 bips rate cut may not flow down to actual lower lending by the banks.
KK, what are the sound bites you're getting from some of your institutional clients, given the, there has been some disenchantment on the Vodafone case, then the entire GAR issue, and now on stocks like Coal India and ONGC?
These are challenges. I mean, obviously, the Vodafone tax issue and the resultant provisions in the budget, they have caught international investors unaware, and they have been worried about what kind of implications it will have. Then there has been a further flow down because of that on the P note, whether they are taxable, not taxable, etc. So international investors or rather any investors don't like uncertainty, and they don't want something surprises in terms of retrospective amendments. Anything which is prospective, then they know when they enter that these are the taxes or these are the expenses that they have to incur.
KK, just want to come to you for one point on IVRCL. How do you think this entire situation is going to pan out, and what kind of an opportunity does this probable takeover bid for IVRCL provide for positional traders as well as investors?
The way to look at it is that yes, the promoter stake, existing promoter stake is very low at around less than 13-14%, and the stock has been relatively undervalued, or the sector also has been under pressure. And now that there is another investor who would like to take it over, it would be interesting to see how institutions who hold more than 35-40% stake in the company, how they behave and which way do they support as such. So wherever promoter stake is on the lower side and where the stocks are undervalued, I mean, this is always going to be a challenging situation. We believe that the stock from the current levels of around 65 odd, there could be a 15-20% uptick in the counter if there is a change in the management, etc. Because a stronger financial group taking over the company would obviously help the company to be able to achieve its goals in terms of the various projects that they have on hand, and they are challenged as far as their finances are concerned. So overall, from the company perspective, a stronger financial investor coming into the company would be far superior for most of the minority shareholders.
But KK, do you think IVRCL's current promoters may actually totally lose the company, and there is going to be, pretty tedious takeover battle at that, with a lot of counter offers being made?
That's a distinct possibility. I mean, these companies, this is a company which is based out of Andhra Pradesh, and they have various projects from Andhra government, etc. So it's important for the existing promoter to try to retain this company because it is an undervalued company at current prices. But if you are up against a smart promoter and with deep financial pockets, then there is going to be a challenging. It should be interesting to see which way institutions behave, whether they go with the existing promoter or whether they support the suitors.
Okay, let me also mark Titan Industries. Stock is up 9 rupees, 239 rupees now for Titan Industries. The DGFT, the body which controls merchandise exports and imports, they have allowed Titan to import coal directly, and that automatically will account for a 1% saving for Titan, because right now they were importing gold via a authorized channel or an authorized agency. 11 rupees up now for Titan. It is at 241 rupees. KK, markets appreciated by, Nifty appreciated by 100 points plus on Friday after that important clarification which came from the finance minister on P notes. Do you think that clarification is enough, or there are still some more lacunas in that statement, and they need to be addressed?
I think the clarification to start with was sufficient, but I think there will be, as I agree with you, that finally it has to be in the law, because until unless whatever clarifications have been given, I mean, if they are not put into the law, then a few years down the line when the actual assessments happen and those interpretations by the income tax authorities can create problems. So it's more important that whatever the intention of the law is made very clear, and if P notes or FIIs are not to be taxed, then it should be specifically mentioned in the Act itself, so that later on there are no challenges.
But KK, if you look at the environment, the list of negatives perhaps is too large and nobody can afford to ignore it, whether it is high crude prices, earnings which are threatening to slow down, or a environment or a tax environment which is no longer conducive for global investors. But despite this environment, Indian markets are showing a lot of strength. Are you a bit surprised with the inherent strength?
Yes, I think, what we have benefited is that the global equity environment has been very positive, and most of the global markets have also rallied to the extent of between 12 to 14% in the current first quarter of the current calendar year. So we have also benefited, and that's one. So the global liquidity has supported us. But even then, when the markets were between 46 to 4600 to 5000 on the Nifty, at those levels, the core valuations itself kind of provide a natural support to the market. So your upside could be challenging if there are more headwinds, but your downside seems to be capped because of the basic inherent capabilities of the Indian economy and the valuations of most stocks.
So, KK, for the quarter gone by, we saw a Nifty range of about 5100 to 5600. What to your mind could be the Nifty range for this quarter?
I will remain in that range, maybe a few hundred points on the upside. Maybe it can go up to 57, 5800. But on the downside, 51, 5200 seems to be a very strong support. And on the upside, I mean, for it to cross 5600 decisively, you require more domestic policy announcements and initiatives. If that happens, then the global liquidity can support, and the markets can make cross the earlier recent highs of 5600. Otherwise, this range 51 to 5600 remains.
KK, are you expecting a significant decline in the fourth quarter numbers?
No, I mean, in terms of the stocks that we cover as such, we are expecting a slowdown in the profits. I mean, your sales growth may not be more than 15-16%, but in terms of your profits, you will see a flat kind of a profit. So that's the challenge. The challenge is more going to be on the kind of cost pressures and inability of the management to be able to pass on the increasing costs. So there will be a slowdown in sales, and more than that, you will possibly have a flat profit kind of a structure.
Which sector do you think is going to be hit the most?
I think sector-wise, the way to look at it is that you could have some pressures on some of the auto companies. I mean, in terms of the profit growth, there can be some pressures in some of the stocks as such. But more than that, banking and financial services sector is a sector where the major challenge will be in terms of how they are managing their provisions, and in terms of how the NPA situation has panned out. So that's one segment where we need to be most cautious, and what kind of commentary we have from the various bank chairmen.
So, KK, let's nail it down to 2 or 3 large cap or mid cap stock ideas where you are personally investing, where you are ready to bet your family silver, and you're confident that if you put in 100, after 1 year, you will get 125 back.
First of all, let's put a disclosure that whatever stocks I'll talk about, our firm would be having a recommendation, and there could be our investors would have invested in it. Having said that, I think more than stocks, what you need to ensure is that what kind of managements are we backing, because finally it all boils down to sustained returns over a period of time, and wherever corporates have a high debt on their balance sheets, they do suffer over a longer period of time. So the underlying theme should be a very good corporate governance and a minimum of debt. If that is the basis, then obviously over a longer time frame we are able to earn decent returns. But having said that, in terms of mid caps, if you're saying, then there was this recent listing on MCX, which looks an interesting stock to own from a medium term perspective. Commodity volumes have been up, and it's one of its kind stock available to Indian investors today. So I believe that this stock should give very good returns to investors over a medium term time frame. And this is a company with very high margins, and if the payouts are decent, then you possibly have a good multi-bagger over a period of time. So that's one stock which I would recommend to investors. Otherwise, we are comfortable on the housing finance sector, and so we have been recommending LIC Housing Finance as one stock to our investors to invest and earn decent returns over the coming time frame.